Hi traders, welcome to your fundamental market update for Friday the 13th of February 2015. A lot happened yesterday, so we'll talk about that as tonight looks like it's going to be relatively quiet. Well, we had a widespread US dollar decline last night due to the retail sales being twice as bad as everybody expected. But having said all this, we did have upward revisions in the forecast, and declines were driven by lower oil prices and gas prices. So, overall, yes, it was a bad report, and the market did react quite aggressively due to this, but it was basically happened from such long US dollar positions and people taking profit thinking that it may be overstretched. However, I still don't believe that the strength in the US dollar story is going anywhere. It still remains, as lower gas prices will ultimately help discretionary spending and help boost the economy even further in other aspects. So I think that we're still going to see the US dollar strength in fundamentals. Also, we still have Fed members coming out and still mentioning that the Fed should still be looking at raising rates. So I don't see that the story is going to change anytime soon, and this pullback is going to be short-lived. We had euro gains overnight, and that was due to the ECB extending its loans to Greece. And they've done this as like a bridge to help them with continued talks in the short term. The next meeting will resume again on Monday, and we'll have to wait till then to see if they get any further to some sort of deal. I'm not holding my breath that they will. Also, the euro and oil had a bounce, both of them, because we did see a ceasefire in the Ukraine and Russia debacle that's going on over there. So a ceasefire was agreed to. It is in place right now, and because of that, we did see oil bounce. The US dollar versus the CAD came off, and that was a combination of US dollar declining as well. And the euro had a bounce, and so did the Aussie dollar, and so did the UK. So the UK had a bounce due to the Bank of England's inflation report. They cut CPI forecast. However, they raised GDP forecast and also raised their CPI forecast for 2015-2016. So so Carney came out and he tried to maintain a neutral stance, but the market seemed right through that with the figures and the datas of the upgrades, and it was definitely some bullish news for the UK economy and definitely priced into the pound. I think that now is really going to set the tone for the pound, and it's going to be a strong currency going forward, because there's no denying it now. It is going ahead really well, and it's quite robust. So they're still talking about raising rates in the near future, and they said, but when the time's right, they will do it, and they'll do it at a gradual pace. So quite positive, and the market loved it, obviously, and that's why we're seeing a boost in the pound. So the rally in the pound pairs will definitely continue, I think, through into next week. The unemployment came out really bad for Australia at 6.4%, which was at a 12-year high of unemployment, and we've seen a lot of full-time jobs lost, and this data was really bad, and the market reacted appropriately at the time and sold off on the Australian dollar, which was right to do so. However, with the with the US dollar retail sales coming in weak, it was just a broad-based US dollar take profit, and we've seen the Australian dollar rally back up to it's now getting close to 78 cents resistance level. We'll have a look at that in the technicals. Unfortunately, yes, in a normal market condition, without those retail sales coming in at such a surprising figure, the Australian dollar would have kept falling, but it wasn't the case. So essentially, we will have to look for the next move lower. And if you missed out on the original move, I'm pretty quite certain that the Australian dollar will fall again. So that's it for the fundamentals and what we had overnight. It was quite a bit, and there's a lot to take in there, a lot to understand and appreciate. And the price action definitely is reflected across everything I've just said. So go and have a look at the charts, and you'll definitely pick up on what the market was interpreting at the time. So coming up in the European session, we have a little bit of GDP out of Germany, and we expect that to be solid, and that might add a little bit of a boost into the euro. and we could see the GDP coming out flat in the Eurozone as a whole. The rest of the data coming out is really third tier weak data. There's nothing major coming out tonight that's really going to rock the market. So I think the themes will take place and quite stabilise going into the weekend. We have some import export, we have some consumer confidence index, which is supposed to be flat. Fisher's supposed to be speaking and he'll be quite bullish as well, I expect, for the US economy. So we don't have a lot coming up, no data that's really going to rock the market as such. Keep an eye on the German data and the Euro data here, and we may get something to help support the existing trends. I'll have a look at the technical video when I post it, and maybe you'll be able to pick up a few trading opportunities to pick up a few extra pips as the weekend comes close. And from there, we will close it out for the week and see what we can do next week. Now, on Monday, there is a holiday in America, and it's President's Day, so we will have quite a very subdued trading session on Monday. So it's a bit of a non-event. So keep that in mind. It's a bit of a long weekend for us traders, but I'll still be presenting to you a video on Monday just to bring you up to speed on anything that's happened between now and then. So that's it for today. Keep an eye on the pairs and have a great weekend. And I'll talk to you all again on Monday. Until then, trade well.